with this first presented fair value gap. I have the 1:30 to 2 o'clock. That's the opening range for PM session. So whatever PD array forms inside that 30 minutes, that's what's going to be used for the afternoon trend. Okay, so whatever setup is going to form, it's many times going to be linked to something that occurs between the 1:30 to 2 o'clock Eastern time. As you can see here, we have a breaker. So we have a breaker here, and it also trades up to the bottom of that first presented fair value gap low. So extend that into the afternoon. We can see a mid range of the lowest down close candle makes the bearish breaker inside of the 1:30 to 2 o'clock. So half of that breaker is also the low of the first presented fair value gaps low. So if we take a closer look at that, we can see that zoomed in here on a 30-second chart, I had a volume imbalance in mind, and I was looking at this as a turtle soup. As I mentioned last week in the lectures, high resistance liquidity run conditions is a perfect storm for turtle soup shorts and longs. In this case, that's indicated in the live stream this morning that we would be looking for lower prices and that the market would be a little bit looser, favorable, more favorable. We can see that actually happening here. I tried to do a limit order, and I'm going to put a link in the comment section of the video so that way people can go to the Twitter account and see how I was trading it actually. But I wanted to go short on a turtle soup run above here. My limit order was a little too rich, so I was demanding too much precision, and it wasn't able to give it to me. So I had to use the volume imbalances in here. And we'll take a closer look at that. But also you can see how it worked the breaker in the bottom of the first presented fair value gap low and dropped precipitously. All right, you can see the executions in here, reaching down into the pools of liquidity. And I'm going to go in a little bit deeper and let you see some more details here. All right, so you can see that this entry here is inside that volume imbalance right there. And the actual high is actually 2 ticks above that. So the high of that candlestick comes in at 20,121 even. So I was marketing in as it was happening. And then the other entry here was just based on this small little volume imbalance as well. So I was trying to time that. You can see the relative equal highs here. That is a turtle soup, but my entry did not get filled. And I was looking for this volume imbalance to be a little bit more of a factor, and it wasn't able to do so. And ultimately, you can see there's alternate entry models here. We have the inversion fair value gap here with a volume imbalance, and you can see it trading up into that. So that could have been an entry model for you, or you could simply use the bearish order block here with the change in the state of delivery, which is that opening price. That's what change in the state of delivery is when it's bearish. That candlestick's opening price when it trades back up to it here, that would have been an entry. This could have been an entry, this could have been an entry, and this could have been an entry. And then ultimately trading back up into anything like a consequent encroachment of this wick also could have been used there as well. Model 2022 is right here as well. So you have a high breaking a short-term low, shift in market structure. Fair value gap there, stop above there, and that could have been your alternate entry model as well. But for you, Caleb, none of this is for you because it's all afternoon session.